I'm Catherine Ross, and I'm here live from the NYC with Jim Cramer. Jim, they say that you can manipulate earnings, but you can't manipulate sales. We're seeing the theme of this earnings season seems to be that we're missing capex, and we're missing top line misses. So what's going on?
Well, I mean, look, there's an industrial economy, and the industrial economy is clearly decelerating to the point where you have to wonder how many rate cuts you need. The consumer is incredibly strong. You have to be wondering how many rate boosts you need. Consumer is 2/3 of the economy. So Jay Powell's going to have his work cut out. Now, I think that in a tie, it goes to the cutter because you're also going to have the possibility of the $300 billion, tariffs on $300 billion, and that would just tip it and would just say, okay, look, we got to, we can't hide in the drug stocks because the president's coming after them. Can't hide in managed care stocks because the Democrats are coming after them. What you'd probably have to hide in the Coca-Colas. So we have to be very careful of being too sanguine in this market because the industrial economy is decelerating by the day. And that's, if you take a look at Ford's numbers, China is so weak. I just am kind of aghast that how bad the industrial economy is. The good ones have been United Technologies and Honeywell. And then away from that, it's hard to find.
Now, viewers, if you haven't checked out Jim's Real Money column this morning, he's on fire with those acronyms. Jim, you just penned a new one this morning. Can you explain what BTF is?
Yeah, better than feared is more important than better than expected.
And what about WTF? Because that's not what I thought it was.
No, that's worse than feared. And worse than feared is, I may have to come up with something else other than worse than feared because the acronym maybe not as good as, I don't know, I got to work on that one. But I am adamant that if you do better than feared, your stock can go up, but most of the guys are doing worse than feared.
And in his Real Money column, he breaks down what is BTF and what is WTF using stocks. So you guys really should check it out over on realmoney.com.
And I'm going to flesh that piece out by the day. I mean, the better than feared has to do with the industrial economy typically because although, you have something like Hershey, which is up so much, and they reported a quarter that was good, but not enough good. So, but you had 3M; they did better than feared. So maybe I won't do worse than feared because of the acronym. I'll just do better than feared.
I like that one personally.
Right. I'll stick with BTF.
All right, Jim. Let's talk about Real Money stock of the day, which is Tesla. After they released earnings last night, now I was on that, or I was listening to that earnings call and covering it live. That was an interesting one, not one of the crazier ones.
No, it was really straightforward. It was kind of like what you expect from a Ford or GM. He's lost his. Look, he's changed. Okay, he did say that if you don't really understand what I'm doing,
and by he you mean Elon Musk, CEO,
Musk. If you don't
right?
understand what I'm doing, you're basically a nematode. But what I liked about it was this exchange between Tony Sacconaghi and Elon Musk, where Tony's saying, "How's the quarter going to be?" Right? And Elon Musk is saying, "Let me tell you about how the next year is going to be." You, Tony, are a small thinker. Me, okay, Elon Musk, big thinker. It was right there in that question and answer that shows you who Musk is. And you can take Tony's side because obviously look at what's happening with the stock. The market's taking Tony's side. But 2 days from now, maybe the market changes because the thing that is absolutely true is that he said there's demand for 2 million cars. And now you could say, well, now the Canton Walmart's been doing unbelievable stuff for us. You could say he just pulled that out of whatever. But if there is demand for 2 million cars, then the bulls will be right back tomorrow.
And he said that by the end of this year, he thinks that we're going to get 7,500 to 8,000 Model 3s produced. But one thing that I'm going to...
And he also says, look, we're going to be profitable except for not profitable.
Well, but I did really like when he laid out when he thinks that they're going to have good quarters. So he said Q3 and Q4 of this year, good quarters, but Q3 and Q4 were, in his own words, impressive.
Yes, and he did say that next year would be just extraordinary. He always give the bulls exactly what they want. Exactly. He's a genius like that. But the Bears are in charge today because they think it ran up, and there were some people who mistakenly thought that he could be profitable. Ill-informed.
Well, I noticed that the stock took a little bit of a dip when Elon announced that JB Straubel, who is one of the founders and also former CTO, would be moving into a senior advisory role. What really stuck with me here, and I want to see what you think here, because JB's move into a senior advisory role kind of reminded me of Johnny Ives and Apple, his move from chief design officer to a senior advisor, kind of similar.
That's a good analogy. I think that the Bears are seizing on a guy that nobody knew, and then making him into big cheese, and then saying the big cheese is leaving. We are doing some reporting in Real Money today that I think will be very significant about who this man is and what he brings to the party, and I think that that will be something to watch.
I've been listening to Kevin all morning when he was breaking down what he's reporting on, and it's pretty interesting. So you guys have to go check that out on realmoney.com.
Yeah, Kevin is departing.
He's leaving tomorrow.
He got a Fulbright, and I love young people who go on and get Fulbrights, and that's sensational. My father-in-law had a Fulbright. It's really exciting.
And Kevin Curran is our Real Money reporter who focuses on stock of the day.
Good, and I'm proud of him. We're going to have to replace him with 40 other people.
Yeah, he writes so much.
We'll get 40 people, and they will be every bit as good collectively as he is.
So while you still can, guys, go check out Kevin's stuff because it is really, really good. Okay, Jim, I do want to...
Once he leaves, he can start calling me Jim. He doesn't have to continue to call me Mr. Cramer.
He does still call you Mr. Cramer. All right. So, Jim, I do have to ask, looking at JB Straubel's move and looking at Johnny Ives' move, who wore it better, Apple or Tesla?
Who
did better? Did Elon's announcement that JB Straubel is moving into a senior advisory role work better than Apple's announcement that Johnny Ives?
I think that the Apple announcement was much ado about a little something, and this fellow leaving I don't think is consequential at all. I think that they are making the cars, they have their blueprint, they have their China blueprint. If they can get the cost down, then the world is their oyster. If they can't, then they got $5 billion, so they can go many years. And that's what I think look, I'm not a bear or bull, but what the bears failed to recognize is that the company has the demand, and they have, that's what the quarter said, and they have $5 billion in the bank. And so therefore, you're going to be fighting these guys for a long time. If you're a bear, maybe it's worth it. Maybe it's worth to fight for a long time.
If you really believe in it. Okay, so let's move on.
Gabe Hoffman's done unbelievable work. Kevin's tapped into his stuff about why you can't own Tesla. But then my daughter was in a Tesla this weekend. She said, Dad, why aren't you pushing this stock? Why do you like these companies that pollute? She's making reference to Dow Chemical because we have some of that for Action Alerts. We've been selling it. We just should have sold it all.
I'm really curious to get your thoughts on the quarter, but I do want to ask you about Facebook. We're going to dive way deeper into Facebook's earnings
Facebook was
over
up
on...
very big initially, and then it rolled over. And I think that the very big initially was right because it was an unbelievable growth call. But those who are going to say, you know what, they have no choice. They have to spend fortunes on privacy, and when they do it, it cuts their business model and hurts their business model. They're right today. Today's their day. Today's their day. Now, I was being blasted on Twitter by someone who said, you said that maybe, that you be careful about Facebook, but it was up so big. And what I was worried about was this, and why we sold some was this. So, Chief, you who criticized me on Facebook, open your eyes, open and close your mouth, because those are a great combination for you. Eyes open, mouth closed. And when you come into my zone, okay, and you attack me, you should expect to get hit. You will get hit.
I want to circle back for just a second because you said something that I want to hit on, which is that
zone.
Don't come into his zone. So you said that they're spending a lot on privacy, and I think that that's really important, but I think that that's also going to hurt investors. So if I'm an investor, what am I thinking here?
Well, you have to bet that the business is so incredible on Instagram, not Facebook, that they can absorb those costs. Now look, yesterday was the blast zone. Yesterday was really just the blast zone. They had no choice but to just talk nothing except for how they're going to spend on privacy. they don't know. See, one of the things that was so unnerving is they're not going to be in charge. So there's Zuckerberg talking about what they're going to spend on privacy. No, it's going to be this independent board and this monitor. This is what I told you would happen in Facebook. I told you there'd be a monitor, not unlike Bristol Myers in the early 2000s. I told you this would happen, but you didn't listen to me. But that's okay. That's okay. But I did not go to college to get stupid. This is not up to Zuckerberg. It's going to be independent. And that's what I think the bears have today. The bears have that on their side.
And Jim, we're going to be diving more into Facebook's earnings, Dow's earnings, and Comcast's earnings over on Action Alerts Plus. So thank you for joining us, and I'm looking forward to our next video. All right, guys, so that's all the time that we have for today. If you're watching on TheStreet.com or on Facebook, as I just said, we're heading over to Action Alerts Plus, where we're going to do our daily rundown. You can check it out on ActionAlertsPlus.com. I'm Catherine Ross, and we'll see you tomorrow.